Hey guys, hope you're having a brilliant day. Hope you're having a fantastic week, and I hope you guys had a brilliant weekend. Welcome to the weekly recap actually on YTK. I managed to catch 700 pips last week on a few compounds as well on USDCHF, AUDNZD and EURUSD. I want to go through these pairs and how I actually approach the market, just so that you can guys have a bit more of an understanding of how you can be able to approach these type of levels in price and how important entries are as well as exits. So I want to guide you through my thought process of why I actually decided to take these trades. First and foremost, the real reason why I took USDCHF shorts was simply because we're in a key level of supply within this key resistance area. Price managed to dip into it, reject. Price came into it again, rejected. Price dipped into the supply zone, rejected. This key up candle prior to a down move, this bearish order block. Price dipped into the monthly area, rejected. Came into it again, rejected. Came into it again, rejected. Came into it again, rejected. So price continuously maintained a level of structure of price, maintaining significant higher highs. And how I would detect that would be price managed to create a higher high. Price managed to pull back to create a higher low. Price managed to create a further higher high. And now I was just looking to sell the higher low. It was really that simple for me. Well, as price managed to came into the key level of supply, price managed to find key resistance at this up candle prior to a down move. So price found key resistance. And price managed to create a bit of a, not a stop run, but created above this significant high. But as price broke above that significant high, it broke below this key liquidity low on this monthly level, which I'm about to mark out on 0.98945. This is July's candle, June, May, April, and March. So price managed to break structure towards the downside and close below the liquidity low at 0.98945. Price closed below the significant low. This is the last bullish candle to push price lower. So this is a bearish order block, monthly bearish order block. So I wanted price to find key support resistance at 0.99300 level. So I managed to mark out the entire block itself on a monthly, because obviously of the three key levels, and I wanted price to manage to create the next significant lower low. I had a feeling price will retrace for this month after we raided this significant key low. So there was a stop run below that significant low of 0.97160, and price managed to push the next month, managed to push back up into a key level of supply into that monthly order block, finding key resistance in the 99,300 region, 0.99300 region. And each liquidity low of stops are resting below the wicks. So that's where I was looking for significant levels of trying to see where the higher time frame targets should be and aiming towards key levels of liquidity in that level. And also in this regard, we're going to look at the monthly open of price. So we were also monthly open of 97,875. So 98,875 was also a target point. So I marked out a monthly open on price where this was actually a significant key pivot level. So on a weekly now, as you can see, price managed to break structure on a monthly, close below the liquidity low. And we also had a weekly MS break as a candle closed below the liquidity low, retested this key zone, this last bullish candle, which pushed price lower. So if I mark out this weekly order block, price managed to raid the significant weekly high, previous weeks of one of the previous weeks high at 0.99950. So price raided that significant high, came into a key level of supply on a weekly, managed to dip it out, and managed to come to this bearish order block. Price dipped into it, rejected back down. This is the last bearish candle, which pushed price higher. And price managed to break structure once again towards the downside and create a new lower low. So as price created a new lower low, we wanted to see where price managed to create a new lower low, 0.98540. 0.98540. This was the last bullish candle which pushed price lower. So as you can see, it came into where this last bullish candle pushed price lower, price dipped into the EQ of the block. So you see how price managed to respect this significant level where supply meets demand and managed to raid this liquidity high of 0.99320. So we managed to create that significant high, raid it straight into the weekly block. And then we managed to create a swing fractal towards the downside. My initial target actually was this swing low. The swing low that managed to raid that significant monthly low, raid the weekly low of 0.99320. 0.97560, and price push back up and reject all the way back down. That's what I was expecting for the next level of structure to create the next lower low. So on a daily, this was my actual initial thought process. As price managed to break below and create a weekly MS breaks, this was the last bearish candle which pushed price higher. So there was a weekly breaker in a significant level. So as there was a weekly breaker in that significant level, I saw price come into EQ of the breaker. So as a swing high was formulated within that significant level and raided it coming to EQ of the breaker, I had two levels marked out. I had this significant level and also this block mark, daily block marked out. So as price managed to, as price managed to come into this 4-hour breaker, let me mark that out. Price was finding resistance in that significant level. On an hourly, we can be able to see where there was a key MS break towards the downside. And this is one of the entry points that was actually genuinely taken. Price managed to break MS to the downside, straight off this block. That's only for like intraday type entries, but normally the H4 was providing me a little bit more clarity, and for further compounds I managed to take one off this significant block as well. So I managed to close out, for example, once I secured a real so I was about 20 pips, so that was about 100, so it was a nice 5R, and also a little bit of, for example, big gains. You could easily do 10%, and this key liquidity point was being raided, and now price is pushing upwards. With the Dixie strength incoming, I was expecting price to have this type of problem, and we also came into a key support zone where price was just constantly bouncing around the zone. So I didn't really expect price to manage to go to my higher time frame targets. I could still be holding price at the moment, because after we currently actually just find a resistance before the next lower low. But once you secure your level of price, you can be very comfortable being able to understand the dynamics of price and feeling very, very comfortable in also seeing, for example, what type. You don't always have to hit targets for you to be able to make money and consistent gains. You just need a significant plan, a systematic that you can be able to take away from the market on a given basis. So it wasn't very hard. Once you understand your price levels, it's not very, very difficult for you to be able to find your zones of price. So on a daily, my initial target was filling in this liquidity void and coming down towards this block over here. And it made sense. Price managed to come into this block. We've also broken structure once more, closing below this liquidity low. We're currently within this block at the moment. Last bullish candle, push price lower. I'm still expecting further shorts on USDCHF. But yeah, it's pretty simple once you can be able to understand the dynamics of price. So like I said, price doesn't necessarily have to hit targets for you to be able to make money. AUDNZD, let me go on a monthly. This was a pretty nice trade. Reason why I was bearish AUDNZD is because simply if you look at structure of price on a monthly, you can simply see price creating lower highs and lower lows. Let me adjust this a little bit. Price managed to create a lower high. Where did it create a lower high at? From this last bullish candle, push price lower, and price managed to create a lower low. Price managed to also create a lower high, and now I was anticipating the next lower low. But then once you look at price, you also got to understand and look at the dynamics of, for example, not just support and resistance, but just having the dynamics of seeing where liquidity is and being able to trade towards where smart money, where the banks and hedge funds will be able to place their stops. So you're normally gunning towards liquidity below these wicks. And as you can see, that liquidity low, which was marked out, was the ultimate target of 1.02760. I think it could get there probably sometime this year, but we managed to have a bit of a key resistance point. Managed to raid liquidity above this significant liquidity high of 106.706. So that's where price managed to raid the liquidity high, and we've come into this last bullish candle, which pushed price a little bit lower below this low. So you see how price managed to find resistances up candle prior to the down move, monthly level of supply. And it came into the wick area of 1.05220 region. So it came into that zone. So as price managed to come within that zone, it found key resistance at May's low. So if I want to mark out the monthly opening price, the monthly opening price is 104527. 1.104527. 104527. 4527. Awesome. So if we go down to the weekly now, you can see that we've broken structure to the downside. You can see that order flow is clearly bearish. Why? Because you create lower highs and lower lows. Price managed to have a bit of an accumulation distribution period where price managed to accumulate right before the expansion to the downside, create a new factor and a new lower low. And where do we find support? We found support at this weekly breaker, key demand zone. So price dipped into that level. As we broke structure to the downside, this came into the last bullish candle, which pushed price lower. So as price came into this last bullish candle, which pushed price lower, price dipped into the level, and this is what price is looking like for me. Let me show you. As price dipped into that level, I was thinking, it's coming to EQ of that level. Preferably, I wanted to raid the previous week's high, but if not, because there's liquidity pending above this level, I wouldn't mind it for it to come into EQ before selling off. However, after the accumulation and the distribution, we had the retracement, and I was expecting price to reverse from this point back down for the next lower low of price, and then probably take profits towards this significant block, this weekly demand zone, because you're going to expect probably a push up from there. And now on a daily, this is where price managed to create the new lower low. So price created a lower low, finding support at this daily bullish short OB demand zone, came into the demand zone of price. And why did it come in towards that level? It's the weekly breaker, right? Exactly. So, and it came into where? After we broke structure to the downside, creating a new lower low. On a daily, what do we see? The last bullish candle, which pushed price lower. We also have down candle, push price higher. So you have basically a bit of a double confluence or block on a breaker. So it's pretty sweet. And we're also raiding liquidity above this daily high. So price raided at significant high right into our key supply zone on a weekly. We have a weekly OB within a daily one. So high time frame blocks is very, very important. So, and H1 gave me a very, very nice entry, because within a weekly block, this is my validation level. So I was thinking the price shouldn't go above this level. So I managed to compound a few different levels. I managed to compound this level where price managed, let me zoom in so you can be able to see it. So price managed to break structure to the downside, retest the block and sell off. However, I'll put my stop above 20 pips just so that it could be safe. I put my stops at break even when I was about 40 pips up. So I was about 40 pips up, and then news took me up for one of the positions. But two of the other positions I had running, which was from the top, before I eventually got out for about a good, I can't remember how many pips it was. I think it was about 120 or something like that. I think it was around this region over here. The reason why I managed to cut out from that level was because as price managed to break this liquidity low, I was expecting price to take off that significant level and expect a bit of bullish price action from that level. So I managed to get out at the low because I was expecting the price to come into this block again and then have a bit of an expansion as it is now. I still think we're going short on the AUDNZD. So it just goes to show the type of entries which you can take on these type of price ups, which will make it a lot more easier for your trading once you can be able to apply the principles. And now moving on to EURUSD. EURUSD was a bit of a frightening pair this last week, you know, because I was 100 pips up. And the funny part is about the whole situation is the fact that I may be 100 pips up, But the funniest part about the whole situation is it managed to retrace a good 90 pips. And then I thought I was going to get taken out of break even before I managed to get my 90 pips back as price came back in. Well, let me show you the thought process behind the trade. Price came into this daily and monthly breakup. You see how price managed to find key support, last bullish candle pushed price lower. Price broke up to the upside and has been consistently finding support. We rated this liquidity monthly low below 1.12455. So we found the key support zone in that level. And we created a low, a lower low, and then a little bit of a high low. We have to swing towards the upside. So we rated this liquidity low below 1.1121 or 125. So we rated that significant low. So we had that expansion to the upside. We can actually see why price has actually gone bearish, but I'll show you that a little bit later. And in a month of 1.13589, that was actually my target. 1.13589. The monthly open was actually going to be my target of price. So on a weekly now, my mentality was, okay, cool. We've broken MS to the upside where we created a new higher high, closing above this previous high. So we closed above the previous high of 1.13480. Price broke above that level, came back in. This was the last bearish candle, which pushed price higher. It dipped back into the block. It didn't respect EQ, but it came back into my pivot zone. The price found support, broke support, resistance, support. We rated the previous week's low. So as we managed to raid the previous week's low of 1.12074. As we managed to raid that significant low, I was waiting for price to be able to push up to the upside, back up to the monthly open. We didn't get that. But however, when price managed to raid the previous week's low and we managed to come into this block over here, this was the last bearish candle, which pushed price higher, came into the block, managed to create a swing low fractal. We have a low, a lower low, then a swing towards the upside. My stupid self didn't manage to take profit down at this daily block. I decided to hold because I thought price was going to break above this block, use it as a breaker, retest it, and then push up to the upside, you know? But that clearly didn't happen. He came back down, and I'll show you my entry because it was on a H4. I remember price managing to come into during London Open, so it dipped into this level over here. So I put my stop just below. This was about 15 pips. It was more enough. It was like a good 9R. That's the worst bit. Like it was about a good, actually it was a good 8R or something like that. And I still didn't take profit because I didn't get greedy. It was more to do with the fact of I believe there was higher time frame targets and price failed to take out the previous higher high, and there's liquidity pending above this high. Very naturally, you're gonna believe to hold. But as you can see, I was literally I took my stops to break even. When price was coming back in, I took my stops off to break even because I was happy to take the first loss. I was thinking, I was mentally frustrated and my psychology was testing me. And the price rallied straight back up. As soon as it got back into this key resistance zone, I literally took profit, you know? And I'm quite glad I did because this liquidity void managed to get filled up real quick. So as you can see, the void in price managed to get filled very fast. After that expansion candle and after the H4 level managed to get tagged, which is around this region over here of 1.1278, I was out of the move. I managed to secure my R and I was pretty happy, but I went half risk for that trade because I took one loss on EURUSD and I wasn't exactly too happy about it. So yeah, hopefully so I was pretty happy with that at the moment. So it was quite a bit of a weird week, but it taught me so much from a psychological perspective. But let me see if I can find and show you the before and afters actually. Okay, pictures. Okay, it was AUDNZD short. This is actually the trade. So I was already in for the trade, and this is the low that I was aiming for, and then that's the end result. Let me see if I can find EURUSD's one. EURUSD, Okay, cool. Let me see. See if I can call it. Okay. Is it straight from this H4 breaker, a H4 block? So let me see if I can pull up the actual result. Actually, that's another previous trade that I actually played out. Let me see if I can find it. It's a lot harder than I thought being able to find this actually. But yeah. But yeah, you get the picture. Let me pull it up. This is the exact level that prior price managed to fly from, was actually here. So if you can be able to see where I'm talking about, this was the block that I was literally talking about on EURUSD. So we managed to play out, and what was the other pair? It was USDCHF, wasn't it? Okay, cool. USDCHF's been one of my favorite pairs of recent times. Let me see. Here it is. Since price came in. Actually, this was my trade from last month actually. So yeah, here's the level where I believe this was going to happen in price, and then USDCHF also played out. So if I mark out this significant level, for example, where the breaker, where this was the actually main point of price for me, if I go back on the picture, this is where I said it was going to sell off, and from that entry point, it's 120 odd pips. So I was right on that one as well. So to be honest with you, once you can apply the principles, you can understand how to be able to literally know what you're doing. And it just takes a bit of planning, preparation, understand how to be able to provide your watch list and work on little significant patterns and being able to apply everything effectively. But I hope this video was very insightful for you. I hope you guys had a brilliant week in the markets. Hope things go amazingly well. And keep watching the rest of my videos because you might learn a thing or two. And if you guys are interested in having a look at my mentorship, or if you guys want to have any questions, just hit me up on YTK Young Trade King, Young Trade King on Twitter and Instagram. I'll happily respond to your DMs, and I look forward to be able to be in touch with you guys soon. Hope you have a brilliant day and nothing but love.